we've got as many people as will be joining. Maybe a few more will join over the next hour or so, but we can't wait. Can't wait for everyone. Yeah, so guys, welcome back to the Thursday FibLab Live. Thanks to everyone who is here. We really appreciate everyone joining and participating. Kind of want to start by just saying, guys, feel free to speak up in these sessions. I know it can be a bit intimidating sometimes. If you have a question or something and you don't want to seem like you don't know what you're talking about, but I don't know what I'm talking about, and I ask questions all the time, and it's really the only way to learn. So yeah, feel free to kind of join in the conversation or to type your question in the chat. And yeah, good. So 1111, who's the co-host normally, I don't know where he is. I think he's gone back to Canada. He's either been eaten by a grizzly bear. Or he's just. I think I've got the time difference wrong. What time? You got any Canadians in the house now? What time is it over there? Flingwinger, you're from Canada, aren't you? 1 p.m. in Canada, yeah, that's right. Oh, he's probably having lunch. Or something's having him for lunch. Good. So yeah, I'm not sure where exactly we can start. I kind of wanted to. The only thing on my mind at the moment is to talk about Sin's 5-minute scalping video that he put on YouTube. I don't know if anyone else has had the opportunity to watch it. It was the topic of a kind of intense debate between me and 1111. And I'd be interested to know what everyone thinks about it, actually. So just as a kind of reference, did anyone, like, how many people watched Sin's 5-minute scalping video? You guys can like type it in the chat if you've seen it or.
Didn't yet.
So essentially, I'll just kind of go straight into it and say that the thing that about like higher time frames that confuses me is that if price is fractal, and I'm going to probably sound like a total simp here, but if price is fractal and the levels work across time frames and on any time frame, I don't necessarily understand what the difference is between trading on a 15-minute chart or a 4-hour chart, in the sense that you could say that the 15-minute chart, there's a lot of higher time frame levels, but surely if you're on the 4-minute chart, there's also if you're on the 4-hour chart, there's also like a ton of higher time frame levels, right? You've got like hourly, 2-hourly, 4-hourly, like daily, 2-day, 4-day, weekly, 2-week, 3-week, monthly, 2-month. So I get like why you wouldn't trade on a 1-minute chart, but surely something like a 5 or a 15 is totally fine, right? What do you guys think?
Is that a rhetorical question or an actual?
No, I'm generally interested to know where people stand on it and what their
Okay.
experiences are.
Yeah, I wasn't sure because you said you watched the video and maybe he addressed it there. So basically, it's already also what you just said. You have just many more time frames above you that are also traded by algos and traders a lot. You know, when you're on the 5-minute, then you have the 6 minutes, 7 minute, 10 minute, 12 minute, 15 minute, 20 minute, 24 minute, and so on above you that are in your way of your 5-minute takes. While if you have your takes on the 4-hour, then chances are limited that something below will influence you, and chances are much less that something above you will influence you. I mean, you have the 6-hour, 8-hour, 12-hour, 1-day, 2-day, weekly, and so on. But you also have all of these on the 5-minute. So, but you erase a lot of that noise. So, for example, if you go from the 1 minute to the 3-minute time frame, you already erase like 66% of the noise that could come from time frames above. And if you go from the 1 minute to the 5-minute, it's already like 80%. So yeah, I didn't do the math yet on 5 minute to 4 hour, but you probably also get rid of a lot of the noise that's influencing your time frame trading on the 5 minute. So that's my understanding and opinion about it. But if anyone else has another take, then happy to hear.
My opinion on trading the 5 minute, I think Sindot kind of reflected the same in the video, but it just doesn't. It just seems kind of pointless to me unless I'm missing something. Just the change in the price on Solana anyway is just not enough to be. Yes, you can be profitable, but it's not enough to make a difference. Like I would just sooner trade higher time frames because the price moves more. Just as simple as that. You stand to make more the more the price moves. So trading a 5 minute isn't of interest to me whatsoever because it just doesn't move enough. That's my opinion. But I don't see any difference other than what has already been mentioned about, it's the time frames. The moves might be more predictable on higher time frames just because there's less stuff above it screwing around with things. So those are two reasons I guess I would not trade the 5 minute myself.
Yeah, it would be fun if it would work like atomically, like the 5 minutes is just it, and it doesn't know about anything else. And yeah, and you probably did some really good money, very easy, very quick. But yeah, that's not how it is. I mean, a good opposing example is, yeah, things may look bearish just now, but then you have a 41-day closure yesterday with a hard close above range trend that's like 3 years old, and things can go wild upwards pretty quick, and we have many more of such closures in the last, I guess, like 2 weeks. So although we want those juicy long entries, and when things are bearish, it's more easier to already talk about $170 pretty quick compared to yesterday, where it was like, yeah, 280 and higher is more likely, whatever. Yeah, you have higher time frames influencing the daily or 12 hour as much as you have in 1 hour or 4 hour influencing the 5 minutes. So the idea remains things keep pushing upwards or find support on higher prices onwards because of all the breakouts and hard closures, and yeah.
What is the what is the time frame that switches then? So we say a 5 minute, you can't trade on it. Where does that switch over to? What time frame does it switch to being able to be? Is it just to the 4 hour, or is there anything under a 4 hour that's also valuable?
No, you can trade it, but you probably need a lot of homework up front with a lot of race and a very strong framework in which you are trading around. Maybe not the 5 minute, but let's say the 15 minute is viable perfectly. You should still then draw, yeah, at least the currently running maybe 1 hour downtrend, maybe go a bit further behind and see if there's like an overarching daily and 4 hour uptrend. You can find trades within, because that's basically also what happened running into this $230 top, and also by having the first fall earlier today through the Asia agent session, while I was like reporting it's holding the 4 hour interior, you had a lot of scalps there on the 5 minute and 50 minutes if you had drawn out the 1 hour and 4 hour before, and you can trade this. But yeah, if you don't have any lines there that give you a frame of reference of where the 5 and 50 minute is bouncing within, then then you're just gambling on the 5 minute or 50 minute without context. So at least that's how I see it. And eventually it lost the 4-hour interior, and then the dump came pretty quick throughout the rest of the day. So, but you maybe if you have traded it, then you were already had 10 scalps that are profitable, and then your last one is pulling the trigger on a loss, but you're up overall. You know.
For example, one of the things that confuses me is, let's just say I have this backside hold level drawn on the 4-hour, and price is coming down. Just put this 2 here. Price comes down to the 4-hour level. If I'm on the 5 minute, surely the lower time frame gives you more information about what's happening at that level, and you can enter a position sooner, and you can get an invalidation sooner on a 5 minute as opposed to a 4-hour, right? Because you have much more information on the 5 minute or the 15 minute, whereas the 4-hour you could wait a whole day before whatever your invalidation is.
Yeah, sure. But also the response of it failing is much quicker, so it goes both ways. You have the information that your trade.
I think the key thing there is that if you're looking at the 5 minute for a 4-hour move, you're not actually trading the 5 minute. You're trading the 4-hour, and you're looking at confirmation of the reversal on the 5 minute, and that's totally perfect. That's acceptable. The move there is basically from the backside to the backside. So if you just look at the 4-hour and you look at the broken range that sits above, the broken 2 candle range, and just chuck a line on that, you've got those 2 candles just up there, 2 green ones. Yep. So just put it on the lowest candle of that. Chuck your line. Cool. There you go. So that was your trade from when you hit 205.7 up to 208.08. That was your move. Now, if you are watching what happens when it hits 205.7 on the 5 minute and waiting for the 5 minute price to actually start laddering up, then you could take that as a confirmation entry. So you hit your 205.7, you wait for the price to reverse, it builds its first hold level, you long the hold level, and you TP at the 4-hour. But you're not actually trading the 5 minute. If you were trading the 5 minute, you'd be taking some tiny little scalp off that first hold level, and that'd be pointless because you're actually going to go a lot higher.
Yeah, so the higher time frames give you your levels, and then the lower time frame lets you get that. Because otherwise, if I'm right on the 4-hour, if you were just on a 4-hour chart, if you could only ever trade on the 4-hour, I presume here, when price touches this line, you have a limit order.
Yep, you just long.
You wouldn't be sure. I mean, on the 5, you would see the structure start to change or change a character or whatever people look for. But on the 4-hour, you would just have to hope, I guess.
Yeah, so using lower time frames for confirmation of reversal of higher time frame trades is entirely best practice. It won't necessarily get you that the lowest knife catching sort of entry, but it will get you an entry that's definitely a more secure, safer entry. And but yeah, that's different, because if you're actually trading the 5 minute, then you'd be looking at the 1 minute for confirmation of the 5 minute change. So it's, whereas if you're just trading the 5 minute blindly and you don't have any of those 4-hour hold levels on there, what you'll find is you will end up getting caught out at the top of something when it runs into a 4-hour resistance, but you think you're actually going up on the 5 minute, and you'll end up basically stopped out at the top.
This is
So you always just mark out your higher time frame levels and then trade within them. That's the gist of it.
I guess I'm overcomplicating everything, but essentially, once we hit this higher time frame level, on our lower time frame, we're just looking for that structure to change and for hold level to be respected, and then we're off.
Yeah, and then you're going to head off to your higher time frame target. So
this is not a hold level,
exactly
by the way, just to get the syntax right.
Oh yeah, because it's not engulfed.
Yeah,
Yeah,
this one
that
would
one.
be yeah, but you may find one on the 3 minute that goes just to make sure. So if you had that hold level, you would take your entry on the one to the right that's bumping into it. If you were like, you have your 4-hour bounce.
Yeah, that's the.
Then you get your first engulfment, your hold, and then you wait for that hit actually after 9 a.m. What is it, 9:05? And then that would be your long. If you were to trade as you have drawn it out, just longing the break from the 4-hour lower is also viable. It's just more guessing than waiting for structure to build and actually trading it.
Okay, and my last question on this topic, and then we can move on if people are interested. But what's the kind of valuable? So how do I want to say it? What's the difference between having a trend line on here? I know this isn't drawn properly, but if we had an internal trend here, what's the difference of just taking the trend line break here and waiting for the hold level to get respected? Or isn't there a difference really? I guess I'm thinking that waiting for the hold is a kind of safer play, and taking the trend line break is a more impulsive entry. But the trend line break is often the greedier entry, right? You get a better entry.
Yeah, that's probably it. I mean, you have the change of character by breaking the trend. You get confirmation of it following through with hitting the hold and then going up. So yeah, pick your poison. If you ask me, sometimes it goes both ways. It breaks the trend, but then falls back below and then falls even deeper. So if you have taken it, there's also the chance that it was just a fake out and you build another trend, or yeah, that candle was just sitting on top. It's hard to say. In this exact example, it's breakout, retest, up it goes, until 208.
So Popcat asks, are there any rules for how much higher time frames you can count on? He says, i.e. the 1 hour time frame, 4 hour plus 12 hour daily. Do you worry about higher than that for the 1 hour? Oh yes, I think he's saying, are there any like specific rules on how many higher time frames you look at? I suppose that's framed around a beginner, like who can't maybe deal with looking at 20 time frames.
So from what I observed, and as I'm still learning the Syndot magic, I think they are all relevant, but I feel like if you try to take into account all of them, then you end up in decision-making fatigue. So if you were to prepare for a trading session for yourself and not just, I don't know, go in and say, yeah, okay, I just take the next entry that looks good anyhow, then yeah, okay, that's on you. But if you were to make your homework, then you'd probably try to find the setup the price is currently navigating within, because let's say that very sexy 41 day closure yesterday. It's very strong, but it doesn't help you a lot right now. It tells you if the price goes to, what was that, 175, you'd probably get a strong bounce. But for the time being of where the price is, as per my understanding, it doesn't do a whole lot. So by that principle, you would try to find time frames that are relevant to price action at the moment. Oh, there was an alert.
Sorry about that.
And so if you can already manage to draw out like a 1 day, 2 day, maybe 4 day, 5 day, weekly and monthly, and bring it all into a chart without cluttering everything that you don't understand what you're trading, then you probably already find some form of framework, and the 4 hour, obviously, if you were to trade a 50-minute or 1 hour. So that's my base take. But if you rewatch all the videos that were there for all daily closures, there are some numbers in my mind where we have like a lot of confluence. So if you can manage to keep track of those, to like be aware that around 189 there's a lot of stuff going on, and 192 also, etc. And you don't have the lines for your trading session, but you're going into this price area, then you might get caught off guard because those things are still in play, but you don't have them drawn out. If that makes sense to you. So there's no like right or wrong. You actually need to draw some things out and see in which price range or in which range trends and hold and break levels price is currently bouncing around in, and then leave those at your chart that are relevant for this.
I can't remember if it was Sin or Cotton Candy, but they have one of them has a +1 -1 idea, which was really good for me when I started, just to kind of keep me sane. I don't know if you've looked into that one, Blue.
Nope. So
Yeah,
what
I
is
think
it?
that's Cotton Candy that does that.
So +1, -1s. You can just keep going, but if I were to guess, +1, -1 is like one time frame up, one time frame down from what you're trading.
Yeah, but he does that when they're origin levels. Like if a 15-minute origin hits, that's 1 hour or something along that line. If a 1 hour hits, it's a 4 hour. But it has to be an origin level. Or at least that was my understanding of it.
Okay, thanks for that.
I actually have a really basic question of when you started this. On the 4 hour chart, on the left, you marked the backside break at 205.70. Why that one? Why not the break at 204.42? The
This
one
one
that's a
here?
little bit lower. Yeah. Why'd you mark that one instead of the one that's a little bit lower, which would be at 204?
This one here or this one here?
That one there. That one there.
Literally because I'd seen that price had already hit it here, so I just wanted to look at this example.
Okay.
I guess you'd be right in that this one would have been the origin. So there might be something more there, but I just looking at this example, price seems to have hit this level here and had a bounce kind of backside to backside, I guess, here.
I mean, on the lower one, it's because the blue's not engulfing, right? Or am I mistaken?
Well, for a break level, that should not make a difference. And
Yeah. two candles, right? To make a range and have a break. So technically it would be actually more to the left because that's where the first 2 hour candles actually. So that's not even an origin, it's just a normal break level. Origin is just a better kind or type of break level when you have like a break level that eventually price gets back to, closes above but doesn't hard close it and then falls back below. That's how you create an origin level and break levels afterwards. So for this range we just got lower lows, so that's basically the most left. 4 hour
But there,
couples is the actual break level as far as I understand. Yeah, this one. Yeah.
yeah, for me, an origin level, from what I've understood, is any break level that has gotten hit becomes an origin, and then if it closes over, well, that's the, like what you just marked right there is also an origin level, because it got hit on the candle at 1430, right before that big move up with the two candles.
Mm.
So before that, it turned into an origin level, and then it like broke the origin level on the two big Greek candles right there, kind of. Yeah, right there, those two. Like the first one made it an origin level, the third green candle broke it. And that
Yeah, we
also
have
would be
the
an origin.
yeah we have the two candle range rejection, and then price smashes through the level.
Both of those would have been origin levels, to my understanding.
If you go to the 1 hour, I guess it's a bit more clear of what I was trying to explain, and go to the very left again. You have your break
Yeah.
level there at the yeah, a bit more to the left.
Oh, up here?
No. Yeah, also, but not. Let's stick to this range. Yeah, this one. That's your your origin. And afterwards, you actually also get some form of origin, as far as I understand, which seems to be more accurate.
Hey,
This one, yeah.
I'm sorry, because yeah, that one, the other one was already broken.
So this is like perfect because now it explains origin versus break level better. This is an origin because price revisit this afterwards, broke through, closed even above, but then only distribution candles were followed, so no hard closure and accumulation above that break. So the other ones are, as per my understanding, afterwards also break levels, just basic break levels, but this one is an origin level because that's where the original break started. And if you were to make the replay on to that moment, then you have a break level there and it gets never broken because you don't get a hard closure above. So that's how you get an origin level from a break level.
Yeah, that's exactly how I understand it too. Yeah, that's a good find as well, that one.
So, and if you go to the 4 hour again, then all of the highs are, as far as I understand, just all of them are break levels basically. None of them are really origins because they never got contested until it price actually broke through anyways. So it's not like you get origins all the time. Sometimes price just goes through.
Yeah, we have I guess on the 4 hour we have one here. And then this as well.
No,
That would just be a normal break.
Yeah.
that's a normal break because it already passed there on where you have the line. Well, that's the whole thing. It was an origin level, and then it stopped being one once it got broken. Depending on where you're reading it from, at the beginning it was an original level.
Yeah, if this if we were back here.
And they work both ways, right? So we expect them to be coming from this trade direction to be resistance, and we want them to be claimed and hard closed to to support the idea of price continuation. But once they are hard closed, then they actually also flip into support when price comes from above. Obviously, it doesn't work always because that's just how it is. But if you were to dig into that 4-hour candle that barely touched it in the middle at like 2 p.m. after the hard closure accumulation, yeah, to the right. 2
Around here?
2 p.m. The next one, next 2 p.m.
Oh, sorry.
Yeah,
Here.
so you have a hard closure above that break level, so it got technically broken and hard closed. And if now you go into
Blue, when you
sorry,
I just stop just before we move. When you have a doji like this, I've heard Sin say a few times about dojis being questionable. That to me kind of looks like that kind of classic reversal pattern starting. But are we 100% assuming that this is a green candle, or is it up for some debate?
no, fair enough. You can check various feeds and you probably find like 50-50 accumulation distribution. But
Yeah.
for this example, what I was trying to get to, let's
Yeah,
assume
okay.
this was an accumulation candle, a valid one. Then if you would dial into the, I don't know, 5-minute for the next distribution candle. So if you, I don't know, put a vertical line maybe on that 4-hour on the blue one. Oh yeah, or you have the layout.
Can just skip back here
Easy.
and have a look.
So now we don't see the line from the left.
Yep.
Sneaky. So I guess if it hits coming from above, we would get at least some form of bounce, you know. So that's also like a Skype you could take when we were to get more candles on the 5-minute.
Yep.
So it gone a bit through, yeah, but in the end it did get the bounce. So before it fucked over completely. So, and when did that reversal happen? Probably at the closure height of the previous accumulation, I guess. I don't know. Feels like it. If you put a horizontal line on the doji.
On here?
No, on the body, on the bottom side of the body.
Yeah, for the hold here. Okay.
Yeah, so that's like your entry and exit. This entry is a break from the origin from before, or the break level, and your exit, your safe exit or first TP, and then SL to entry would be basically the break level again. It's not a huge move, but it's like also like $2.20, so also not too bad.
It's basically that wick up then we're trading.
No, it's still in the body as far as I guess it's still in the body of that. Yeah. Hits there, or it's very close. It's both. Yeah. The entry is in the body, and then other candle opens. It creates a wick. Yeah, no, you're right. Yeah, it's after 6 p.m. where the closure of the 4-hour is. Yeah. But yeah, fair enough. Doji candles are always questionable, so got a point there.
I guess we would have been expecting, or at least I would have, if this was an origin, for price to go up higher, maybe.
Yeah, after the hard close, that is usually what you're expecting.
And remember, does it do it? Oh, it doesn't. Eventually goes up higher and then destroys us. Yeah, okay, good. Super.
Sometimes they are
Oh,
just. Sorry. Yeah.
No, go for it. Sorry, go.
Sometimes there are just also so many more things at play, even on the same chart. You have these lines, but if you look closely, you have a 2 versus 2 4-hour engulfment at the same place. Yeah, that also, but even prior, which would be the trade I was trying to address. Yeah, this one.
Oh.
So there's like an 8-hour. I don't know if it shows up on the 8-hour, but it's technically an 8-hour engulfment. And you get your entry after the loss of the break level, and then it goes higher again. Yeah, okay, it shows even up. Good. So just a regular 8-hour, and you then got your entry and exit on the. Even it's losing the break level afterwards, you know, that we were allegedly claiming with that questionable doji, you still go higher. So it's like you have more things at play at the same time sometimes, and can try it to account for all of it and trade it. Or if you're not sure, just don't trade at all and just let it develop until you find something that's more clear.
Nice. And just for anyone wondering, when you said before it's a 2v2 as opposed to a 1v1 or 2v1.
Yeah. What's the question? What it is?
Yeah, I guess just kind of like a huh?
Okay. Yeah, so as we already said many times, or probably everybody knows, time frames are fractal to each other. And so are the rules. And so is 2v2 is nothing else but a 1v1 on another time frame. That's where you can also find a lot of sneaky trades. If you check the 2-hour from just a recent $230 top, you wouldn't find an 8-hour engulfment there. But if you open the 2-hour and go to the current price, then you actually see a 4v4 on the 2-hour at the top. And that's an 8-hour engulfment. That doesn't show up, but it is an 8-hour engulfment. It's just sneakily hiding in the 2-hour time frame. And that's actually a trade that then didn't get activated yet. Very close. You could have traded it if you were not waiting for the greedy entry. It will probably happen again. Oh no, wait, sorry. We got higher afterwards. Sure, it got activated immediately after, and then it went lower. My bad, sorry. And then it went from the entry of 208.90 to 206. So that's if you have the same number of candles in opposing directions, that's as perfectly in 1v1 as you find it on any regular time frame. It's just those trades are also hiding because that's how rollovers work and how the start of different time frames work. So the 8-hour doesn't start there and doesn't end there, but nonetheless, it's an 8-hour candle. If you were to put all the 2 hours together and put them next to each other, then that's 2 8-hour candles where one engulfs the other. And that's also a very good way to eventually see that steam is running out because you will find a lot of those structures when forming bottoms or tops where engulfments that are not on the normal time frames for direct 1v1s. But if you look close enough, then you will find those, and then you know that something starts to be off and running low on steam for that directional power. So is that clear what I mean with the 4v4 on the 2 hour? Or was I just rambling and
Yeah.
you actually
Oh yeah, I
what I'm
got it.
talking about? Okay.
Does anyone have any questions on that, or that they're not sure about? Feel free to ask.
Makes sense to me. It's basically you want to find a 2-hour range to follow the move. So if there's 4 candles, like in that case, you would automatically know it's an 8-hour. If it works out, then you should play out the move in the 8-hour time frame, right? Like that should be your frame of reference, because that would make it a. I'm not sure if that'll make a 2-candle range or not, but
I didn't
the
think
question
about
is,
it honestly, just for how to approach it in more nuanced. It was more just an answer to how 2v2, 3v3, 4v4, sometimes even 5v5, 6v6 are identical to 1v1s, just being a different time frame. But you can for sure optimize your entry on this one. Technically, as you can see, if you were to take that entry and exit without thinking about it, then you were made profit. But since after the engulfment you were hitting supports, the chance for a bounce like it did was likely. So that's a way how you can improve your entry on such trades by waiting on other breakdowns, confluence, looking at what you've drawn out, and I mean, you even got a 2-hour engulfment afterwards, and I'm not sure if it completed. It hit both entry and exit, but I don't know if in the consecutive order. So if you were to see that you're hitting resistances there again, which we did, but you know there was this 8-hour engulfment, and you think price is probably coming lower sooner rather than later, then you could take that 8-hour FIB with a much better entry just. You know, it's not like 209 as the entry if it's like plain technicalities as how the setup is, but you get like a $2 higher entry even, and then just lean back and wait for more gains.
Nice. Yeah, so there was one thing, Blue, that we said we might talk about, if there's no other questions, which were divergences.
Oh yeah, that's a huge topic. Yeah. Yeah, we can talk about it a bit. Why not? I don't have much prepared yet, just the charts I'm using anyways. So maybe since you were DMing me, maybe you can just start off with your questions and then we work ourselves from there.
So I kind of presume everyone knows what a divergence is. Just in case they don't, because at one point I didn't. This is very, very basic, but it's when we have price like on the chart, and then we're using any kind of oscillator, I guess, like the RSI or the stochastic. I think you can find divergences on like the MACD or any of those type of things. When price makes a low, a lower low, and the oscillator makes a higher high, or the price makes a higher high and the oscillator makes a lower low, any number of these combinations gives us a divergence, which I believe is a kind of an indication we may be getting a reversal, and underline the word may, because price can always just keep pushing in that direction. So hopefully Blue will be able to tell us how he figures out if it's a reversal or a kind of continuation in it. The price is just really strong. I guess that would be my first question really is, Blue, divergences can start showing up and then price can just keep pushing and pushing before it rolls over. So do you have a way of how do you solve that problem?
Same with with most things. Confluence is king, and extremes are the best. I mean, you have multiple trades, and if I were to share my screen quickly. By the way, that cheat sheet is fine. I'm not sure about the hidden bullish and bearish divergence. In my opinion, they are a bit different. But maybe I don't get the painting right, so let me just share. Swap the screen. Okay, there you go. So if we were just to the RSI, so that's like the basic indicator. It's a default one. If you go to the indicators, I guess you find it already with RSI divergence. Then that's just the very first one. So that's built in. And good example is right here, for example, on this very cool 194 low. You have like price keeps falling, but the strength keeps increasing. So that's a bullish divergence in plain sight. And then you even get like a consecutive drop afterwards, nearing these lows, but the RSI is still pretty strong. So it's like just continuation or confirmation where you get the retests of these lows again. So either or of those entries are pretty good if you were to know why you were entering here, looking to the left, and you get this divergence here, then that's a good entry. And then you could easily add more here because you were just retesting this range before it kept going. And what I like to do is getting multiple confirmations on multiple time frames for those extremes. So this was like the basic setup. What I like to do is draw out because same as you have trend lines on price, you have trend lines on indicators. So if we were to go and take this bottom here from the very left, coming from this $185 low, then you can perfectly draw a trend line through the second tap here, and then you get a support and a bullish divergence, which are like the most favorable entries, because you can draw trend lines on this indicator very well and get meaningful results with it, as you can see, same as like when you were drawing this out. You have like, if you go over here, and it's still the same time frame. We're not addressing yet like matching different time frames for even better trade setups with more confluence. But if we were to observe this price action here, price keeps climbing up but starts losing steam, you know, so it climbs higher, but it loses strength. So it means the decline in between are stronger than the creeping back up. Might be a bit confusing because it's like, how can the price keep climbing and the indicator falling? It's just the nature of how an oscillator works, because it caps out at 100. It actually never reaches 100. At least I haven't seen it, and it caps out at 0. So the lowest things you might ever see is, so 80s and 20s is already super high and low, but there are like super rare occasions where you hit like 90 and maybe a little lower, a bit lower than 20. But yeah, it never goes to 0 or to 100. So it just oscillates in between, and it is in self-referential context of how price moves, how fast, in the context of where the oscillator is already sitting. So if you are at like the 75 level, like here, and then it falls, it can fall much quicker on the oscillator because it's already so high. And when then price climbs back up again, it needs a lot of more power to overcome this level again, because it's in a relative context to itself of sitting at 50. So it would have needed to go to something like, I don't know, let's say this, to be still strong here, you know, but it didn't do that. It just kept climbing higher just a bit and started to form these bearish divergences here, because you have this price and afterwards this price, and it's hitting lower levels on the relative strength. And then you can already see how sharp the declines get into this top. It keeps cringing upwards, like, oh my god. It's like if you are, it's like the perfect comparison is always like if you're hiking a mountain and you're taking longer breaks and you cringe a bit upwards, and then you're like, oh my god, I'm struggling, and then, oh god, no, I'm falling back, and then, oh, okay, I creep upwards. Usually just try to hit some stop losses here, but it reflects the same on the strengths of the move. So you kept hitting, like, this was some form of top, then just a little retrace, and then it pushing higher, but losing steam here. So it already started forming a bearish divergence into this, and then perfectly into this, and then even to the next one. So if you were to take an entry here, you were not too bad off, because you were sitting at these entries. And if you are then just patient and look what price does and starts to form this trend here, because you can already start drawing a trend with this. Probably this is also kind of part of it, but it doesn't fit perfectly. So let's stick to this one. And you see it's going like in this cringy, creepy way upwards. Obviously, just trying to sweep some stop losses on the last breath, and it's hitting the trend line again on the RSI you've already have in place. So you could have easily just add a bit more here, anticipating that it will eventually get a sharper decline. So that, which is then what happened. So question is, how much is hindsight? How much is like reality? Reality, it happens very often, especially if you're trading the extremes. If you try to trade middle range, and that's, as you know, from all the other things you already learn and know, like middle ranges are usually just gambling. It can go both ways. But if you have an extreme, which is supported in an indicator like this oscillator of the RSI divergence, then your chances are very high that you're actually getting into a position that will either end up in profit, or you end up in only very tiny losses, because maybe something changes. Let's say I were to draw this out as our trend, and let's say it wouldn't have done this and reject here, but you were adding, and it actually gets a breakout, then a retest, and then flies higher, which can definitely happen. Then you were, then you were in a shitty short. But SLing out of it would have been already very close to your entry. So not only is your chance really high to get into profit, also your risk is very limited of getting a big loss because of how the setup already started when you were taking those entries. So that was a good example for bearish divergence and bullish divergence, especially if you have like a large trend line. RSI loves super large trend lines. I can show you some on like my 4-hour setup. Maybe looks like a bit of art. You have seen those in chat already. Oops. So there are like super large, super long trends that are still holding up truths until date, even if they're coming all the way from like June, some even further out from like, I don't know, what's this, January even. And our price, when it gets there, gets a pretty rough, pretty strong rejection. So that's also like how I like to use them. The trend line that I find with the most reaction about it is probably the most right one in some way. It's like a voting machine basically. If you have those lines and you get a lot of reactions for that trend line on the indicator, then it means that either algos or traders that doing manual stuff are at those lines and are reacting with their money to these lines basically. So as you can see, like this local trend, this red line, I try to have 3 colors meanwhile because then it otherwise gets too complicated to explain it in chat. So you have this local trend, this red one. You could have started to draw it from this prior top here. It's coming from here. It gets another high here and even a third here. But you could have already traded the third one and also the fourth one. That's also why I was yesterday like, I don't know if we will go higher from here, even if I defaulted on my short for different reasons, because we're hitting this support and blah, 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 whatever it is, what it is. But like actually shorting this was very highly likely successful because you have a local trend here and an even larger macro trend, as I like to call them, colored in white, that are coming from even higher time frames. I mean, it's almost the same line, but yeah, you can have local trends and macro trends at the same time. And then you get pretty strong results for entries. So that's also a reason why I'm eager to say chances to find a bottom nearby are very high. But if we don't, then there's not a whole lot to keep us from falling all the way down here. You know, there's almost no structure. Maybe you can find something, but given from what's already there, that's a pretty good moment to start thinking of layering into a long. For the same reason as like you find your other hold levels and break levels and trend lines. If price keeps just smashing through everything and ignores it, which goes both ways, then it's always questionable how sustainable it is. A healthy price movement should always react to their resistances and supports to some degree. But if you just smash through, like also this downside move, same as the upside move, was just rushing it, hits like all these 4-hour shit I was just showing you, then you get all the other data I shared in the chat, then the chances for a reversal are just extremely likely. And you can get that confluence with these divergences. So before I continue with the matching of time frames, are there like questions for now regarding this? Or may I just continue otherwise?
Well, I'll ask you, Blue. I've been caught out with divergences many times where, price keeps pushing higher and I try and short it. We like that first example you were showing where that was happening with the RSI. Can we switch to, obviously we can look for a higher time frame level, right? I think you were on the hourly chart. We can look for a 4-hour level or a daily or a weekly level above us. But can we also maybe switch to a 2-hour chart or a 4-hour chart and try and kind of compare the RSI divergences between those timeframes to get a better idea?
Do you mean tops or which specific one?
The example that you had up first, where the RSI was kind of dying, making lower lows, and the price just kept pushing higher.
So like this one here. And you have the same one here also, right? So it's basically most of the time the same pattern. So it's both tops, and this one even also. So yeah, that's why I like it so much. It looks different because it's price also is not super identical, but it's actually the pattern you are trading is always the same, or kind of always the same. So what is the question?
So as we push higher there on the price, can you switch to a higher time frame or a different time frame and try and figure out and compare the RSI and divergences to get a better idea of where the top might actually be?
So you mean like in this area, what happened on other time frames, basically, right? Just roundabout. So yeah, that's a bit more tricky. It's not directly on a 4-hour bearish divergence because the oscillator actually went a bit higher, and same as here. But yeah, the answer might not be as formulaic as you want it to be, but that's also where like experience may come in a bit, because what RSI is basically telling is how strong is price movement, how much strength is behind it. Even if it's going higher, it doesn't necessarily mean that there's a lot of strength in that move, because how relative the price movement to itself was. So if I was just to look at this setup here, I would probably already say that the steam is running out and would look for trend lines if I haven't had any yet, because I can obviously just go by this already and see that we are already hitting like certain trend line resistances. So breaking that out needs a lot of movement. But if I was just to look at this atomically, you can also draw these trend lines upwards. You don't always need a downward slope to have a resistance. You also are perfectly fine with upward slopes. So that's not only looking like it's already losing steam because it's pushing higher, but the oscillator is not really like getting ground. It's just hovering around the same level. But you would also actually find yourself in a hit resistance, even only locally, yeah, that's my base take. So what's your further question about it, quote unquote, so I can explain better?
I guess it's like, how do you, I guess maybe it's not possible, but how are you kind of, because obviously now we see it in the past, it's kind of obvious of where the top was, but how are you kind of judging where the top is, maybe to I mean, when we get that big blue candle, it's obvious that there's been a strong rejection, but maybe by that point it's too late, you've missed the entry.
Yeah, that's probably as much as confluence will get you. You can draw multiple things out on the RSI. That's where you get most confluence if you hit like multiple resistances at the same price point. Sorry, I removed the lines. Which top was it? Yeah, this one here. So that's technically, it's like a, yeah, did it hit the same value? Let me check. I guess it gone higher by a tiny slice. 888. Yeah, okay, it went higher by like 0.2. But you know, the price went so much higher at this level, like $10, and RSI is not matching it with like a stronger level, like something like this, to justify it. So you're in some form just hitting horizontal resistance as much as this one is here. It's not, doesn't need to be trend lines all the time. It can be also just raw levels, and they are very reactionary. So that's why I say it's very contextual, but you get a lot of confluence here that this price is probably not sustainable to some degree. And that's basically most of the time all you want for your trades. Confluence that price direction will change and will get you into profits. And if it keeps running a bit higher and you find more confluence, like double hit or triple hits like this, let's say you were to hit like this high here in some form, or this in the middle is deviation. So this is your trend because you have these two humps. And you hit this one, you could try to take an entry here and then see how price unfolds. If you only have like a stop loss of $2 or $3, yeah, then you would probably get stop loss sooner rather than but you get new ranges that form here into potential top. It's not like rarely ever does the price just to a level and then just absolutely nukes through it without any macro events or I don't know, Trump meme coin. So if you were just staying calm of price hitting this high and we're like, yeah, okay, what is the likely chance of what's happening next? And then you were check your RSI values and hitting these tops, match the 1 hour, 4 hour and daily comparably. And then you see everything is near or at resistances and or already bearishly diverging in some form, then your chances for shorting this are just simply super high. It's just more unlikely that the price will just nuke through than it is to reverse here, given of how much resistances it is facing, you know. So all is confluence. It gives you entries. You have this reverse relative strength indicator that I'm using a lot, where you can enter RSI levels here, and then it will tell you, let's say we have this 4 hour here, and we want to know what happens if price, let's say, goes for this level again. So around about 37. You can enter that here and activate it, and then see where this price line will match the price for you. So it simulates where would price be right now on the candle, or sometimes even on the next candle, depending on how much variance is between those two candles. If the RSI level was to hit 37, then the price of Solana would be about 198. So that's also where you can anticipate certain things, like when we were like hitting this 213 range, why I put so much money into adding to 213 is basically I was looking into all this divergence that was happening in the 4 hour Sorry. Gets a bit messy if you're not used to it. That hitting either the local or the macro trend here was sitting exactly at this 230 level, and the confluence added to this high, and the heat maps, you know, you add confluence and confluence and confluence, that the price will just nuke through this is extremely unlikely. So my chances of taking the risk to improve my short is very legit versus, I don't know, adding huge lump sums every dollar up just because I'm mad it's not reversing, and then, oh yeah, okay, eventually it has to come down. No, that's not how you do it. For layering into a position, you want the confluence to justify the risk you take. And my risk taking on this reverting somewhere here. Sorry, I should mention the RSI, how it's drawn out, follows candle closures. So I mean, you can change the mode to highs and lows, and sometimes I do it. Rarely, but sometimes, to get another precision. But for the base usage, you stick to the setting of being a closure. So this candle wicking up there actually hits local trend, even went a bit higher, and was right below the macro trend I've drawn out, and you know, tapping at that local trend. So that was good confluence for me to just, okay, I just add the cushion here and then see how it goes. And if it was to nuke through, claim this, and then just fuck around, then the price would just hover here. And then I could make a second guess about if that adding was in line with my risk, you know, because then I was like, okay, I don't get a strong reaction of a rejection here because it's holding, it's claiming this local trend, it's hovering, it's consolidating. So now the script flips a bit, and the chances are that we actually get the bounce, you know, because it claimed that resistance. But at first tap, at first hit, the most influential take here is that you get the rejection, which we got, and which we most of the time get. Like you can see it all along, like how it's just dying alongside that resistance. And eventually you get the breakout because the slope keeps on sloping down. It hits all these supports. Fingers crossed, going to Goblin Town without any support, or I would have to find some that's relevant. And since we ignored all the other support, usually what RSI also loves then, in this case, because we have like 3 pretty large crossovers of support here, it will also usually then ignore it on the inversion because it didn't respect it for one way at that moment in time, and usually that's also when it won't respect it on the inversion. So it's more likely that if we get the reversal nearby, that it will just go through. It's respecting this line a whole lot throughout the whole time. So maybe get a bounce back here, test this, and then actually go higher. And since the slope is getting into like lower levels, it's starting from these extremes, you know, even a macro trend from like all the way July, going all the way here, and then this local trend on top. Eventually these lines hit such low levels that price eventually becomes that price gets into a better position of then just actually taking these. So if we were to do like this, we are entering areas where like 60 is not a super high value. You will find it across the whole thing. 80 of 75 or 80s, even higher, rare values, easy trades for trying to short it. Same as on the lower end if you have like this. It's like a no-brainer entry for long if you fall into Goblin Town like here on the 4 hour. Not longing this is more risk than longing this, let's say. But eventually, these trends come into areas where price is allowed to actually claim it and then bounce higher from here like this and break these trends. If that makes sense to you. If not, please ask. I know it's a lot and it's a lot of lines here, so it might be a bit like, what the fuck? But yeah. We go to the
Guess
daily, see if we
everyone
got there.
gets it.
Sorry? Yeah? Didn't mean to interrupt you.
I guess I totally understands.
Yeah, so that's for the daily, actually the current setup. We have like 2 local trends which are hugging each other basically. So if we were to close like this today, then same as fingers crossed to hold this for the next closure and just consolidate a bit. Because as you remember, on the 4 hour, we're also sitting at levels where the long is justified. But if it was to lose it and you get a loss on a trend line, usually by a closure, let's say if you're losing it, then closure below, and then a second closure to confirm. That's when when your chances are limited for reversal, but you have a lot of fake outs on first closures and then it just immediately claims it. So something like this would be absolutely not unusual if it closes like this, but tomorrow it does just like this, just to snag everybody and all the algorithms out that they have these lines and say, okay, we got the closure below, I'm closing my longs, and then price immediately inverts. So time is also very relevant. And you can see that on the 4 hour, for example, very recently. I just added this one today to see where price may go when we keep losing these macro trends. But we were basically closing one time below and then it immediately reclaimed it on the next one and smashed through everything higher. Then took it actually as support. Resistance again. Lose it once more, but no confirmation because it was just closure below and then smashed higher again. So yeah, it needs more exercise, to be honest. This situation here, I can see how that shaked out a lot of people because they have this line. It's super easy. You have just 2 very obvious lows, and then you get a closure below, and then either the algorithms or the manual traders behind the desk are like, fuck this shit, closure below. I am already exiting my long, but they didn't get the confirmation. The confirmation comes with the second closure, and that second closure would usually be like, if we were to go here, oops, one more. Yeah, it's too far. So that's your setup. That's your scary moment of, oh no, we are losing the macro trend. And that's probably where your price would have helped you better from the framework we're all learning now, same as me, that you perfectly tapped this and held it as support. But others that are like just working on something like this are like, oh no, we closed below, I'm quitting my long, not worth the risk because there's nothing to hold it, and then actually fall into this whole area of Goblin Town. But there was no confirmation, and you would want to see confirmation at least like sideways or more down, easy as that. Or what it usually does is then actually take that retest on the resistance, close there, and then go really sharply down. So yeah, one closure doesn't make a loss. So, and the best confluential trades are you get a lot of time frames agreeing at a similar price point with divergences. Then that's like, yeah, chart porn for entries, either short or long. For example, there was this weekly when I was actually coming back to charts shorting. I guess it's this one. This one. Oh, I guess this one. Yeah. So if I was to go to my weekly chart, so that's the setup on the weekly drawn out. We got a super strong breakout of one of the two largest trends that even exist on the whole Solana chart. That's pretty amazing, coming all the way from 2023. But shorting this was, yeah, a pretty good bet for many reasons, and that's probably, yeah, that's the moment or the thing you were asking about, Zach, is how do you get that confluence? How can you be more sure that it doesn't keep pushing higher, etc. So if you have this drawn out, and I guess that's like with anything what we already know, the time frames are fractal to each other. So if you have that drawing on a 4-hour and you were looking on your entry confirmation or confluence then down to the 1 hour and then pull the trigger for the 15-minute setup, it works the same as what I'm describing now, because we have a weekly, you know, we'll go down to the daily and I guess 4 hour and 1 hour. And then if I can find it back as I did back, then you will see how you get all these confluences. So when you were here, getting into this price, maybe we can just rewind, makes it a bit easier. Okay, go even back one more, I guess. And have the candle while it's pushing. Can I do that? Yeah. Okay. So this was the setup where I got alerted more or less. So we were just from all the support, rightfully so, coming from the lows, kept grinding higher. Then we were entering these very strong global trends that are, yeah, no joke. So what I was looking at then is, okay, well, where are we on the other time frames? So if I go to the daily now, I would have found myself in a, what the fuck, 80 RSI level. So that's already like, okay, something is off here. That's like we're running into weekly resistance. Double, we smashed through one and run into the second and sitting at a second. We are sitting at a value of 80 on the daily RSI. And then, I mean, I probably don't even have to check the file. It will be probably very high. Yeah, so that's even like 84. Yeah, already dumping down a bit. And if I recollect right, it will make a high. I guess it went to like 205 or something like that. I guess my entry average was something like this. So whatever. What will happen then here? You have the weekly resistance, which was the first one was not respected. It ran into the second one. And then you have on the lower time frames, such as the daily, extreme values, which are even by default shortable, even if you don't look at anything else. Shorting something like 85 on RSI has an extreme high chance of winning, especially if it's on larger time frames. If you're doing it on a 1 minute or 5 minute or 15-minute chart, then you can have things like, okay, it hits it and it falls lower, but price actually consolidates to the right, and that's how you then get your reset, and then it actually picks up steam again and has room to actually run. So that's how you get consolidations both ways, or distributions and accumulation phases before price keeps continuing in the same direction after it has reset those indicators. But you don't do that as much on timeframes like the daily or 4 hour. Actually, really never at these high values. So keep in mind you were running in the weekly into 2 global trends that are 2 years old, very strong. Old stuff is very strong. You were sitting on daily at a super high level, not respecting like anything. If I was to, I don't know if I did, but I can imagine I did at that moment in time. Was not respecting like any possible trend that I was to draw out from what was there. Was just smashing through. So that's already questionable. That's not like a natural breakout of, okay, yeah, up only and then off it goes. No. That's just overbought, brain rot, short squeezing basically, and then long entertaining. So you were to check the 4 hour again. And could already try to sneak an entry here. Now you're a bit late because it's, it reset already a bit, but price is high enough. So as far as I remember, it kept grinding higher while it kept making lower lows on the RSI, and that's when I started pulling the trigger, because that's like super frothy, super confluential of a very strong reversal eventually. So let's press play for a bit. So there you go. You already got your first bearish divergence. Price hits higher. RSI hits lower. I mean, obviously, it's super high already. It's not sustainable to just keep grinding into a 100 capped oscillator non-stop. That's not how it works. Everything mean reverts. We know that term, and it's perfectly true. So that's like not sustainable. Kept going. I guess we had 4 divergences even, and that was like, okay, now I'm coming back to the charts, dial money to the account and short this shit. So price kept grinding higher. Now we have a triple bearish divergence, even in under a trend. So this was your perfect entry. Your risk is like super low of shorting this, given all the context, So what price was it there? 202. Okay, let's see what happens next. Okay, it nuked a bit higher, short sweep or SL taking from the 2 highs before, but it maintained the trend. So what do you do here? Are you like running like a chicken from your prime short entry just because it went a bit higher? No, it actually even maintained the whole fucking trend, grinding for bearish divergences into weekly resistance, into daily overbought, forming 4 bearish divergences, or 3, because like 1, 2, 3, maintaining trend. So that's like doubling down area, not chicken out and then be like, oh, okay, it will up only. Yeah, and the rest is history. I guess it was only falling from there basically, right? Yeah, okay. So that's the basic idea, and you get that all time frames
So-
matching to each other. So you don't need to trade weekly only, but you can do that with the
Can you
daily
go back to that
4 hour, 1
example
hour, 50
quickly?
minute. Yeah, sorry.
You just go back to that example where you were on.
Yep. Just a second.
Not sure if it
Sorry.
was on a different time frame or it was. Yeah, there we are.
Should I replay or whatever?
I'm just wondering that, like prices pushing up higher and higher there, and we've got that bearish divergence for the RSI. Is it? I'm looking at like how I'm trying to use this is to put in my key levels, my break and hold levels, or an origin or whatever, and look for divergence. It'd be fair to say that as price keeps pushing higher and higher there, and we're getting the divergence, that probably a trend line break on the kind of price action candles would be the sign we're now rolling over. Like if we had a trend line going up that very steep hill with the yellow candles, we can essentially, once the trend line breaks there, we've got that super strong bearish divergence. That's probably where price is rolling over.
Yeah, I guess that's. I mean, it sounds boring maybe or repetitive, but that's how you get confluence for your trades, because that's all the time. You don't want to nail it to the penny. You don't want to nail it even to the dollar. Not even the best traders in the world will always do that. You want confluence to have maximum gains with least risk. So either for scalping, that's how you downsize, take a little position if you're on the 5-minute or 15-minute, but that's like serious money territory. That's where all the big money and all the action is. So if you do your cycling here and your race, I don't do that right now. I'm pretty sure you will find a way to justify that you lost your 5th or 6th ray on various time frames. And you also have that super large trend coming all the way from here. I don't know from where it originates actually with the weekly. I just put it there after it happened, I guess. Yeah, but yeah, I'm sure you will find you will find other resistance that coincide there. Otherwise, you get such a strong reaction probably. Where was it? Here. So, I mean, when I did that trade, I wasn't into what Sin is making all the videos about and all the knowledge sharing about. I didn't even know about it. I just seen his chatter since I know him and his success, but he was just like throwing around chunks how it works. There was never really like digging into it and learning it actually. So there was for me no array cycling on whatever trend, range trend, just normal trend. I had my setup here. I had my VWAP. I had my RSI, and that was perfectly enough to get the confluence to deploy large money here, because that's not sustainable for me by any metric. And even if it was to break out, then my risk was super low, because as I said before, while you're doing it, obviously anything can happen. Chance super low that it would happen, but it could have happened that we go from here and claim that and then fly a bit higher, I don't know, and then be like this. Yeah, okay, but then when my entry is like something between 230, 203 and 50 cents and 205 or something around that. I was trading it up actually while it happened, so I'm not sure anymore. I started somewhere here and then I kept TPing and entering again, TPing, entering, adding back until it like was near enough to the top and I stopped. So I'm not perfectly sure, but even if it was to take that breakout against all odds, then that breakout would have happened at least with some form of retest very close to my entry. So even then it's extremely low that this was a risky trade. deploying large money here. Yeah. I mean, you can find out if you were to cycle through these with the race, if you find your relevant loss numbers and then backside retest and then rejection. You probably will. You will also find trends and range trends here after all we learned just now. It's just not what I've drawn out. So feel free to do it while we talk afterwards, and you can share. But if you were asking me how I did do it and how I do it usually and for a long time and how I take high confluential trades, larger positions then or adding larger sums for certain reasons, that's how I get to these decisions. And I want to learn that framework that's fortunately shared by Sin, because I feel like there's a large edge that I'm missing. And yeah, so at the moment I'm in the confusing myself state of trying to have my framework in place and taking trades while also respecting what's happening at those rays. I recognized that today when exiting my short. If I wouldn't have had those rays, and I probably had, let's say, the wrong ones, whatever, I probably wouldn't have exited there. But I want also to respect it and learn it. And for the things that happened there when I was there, where is it? Set my 1 hour. Ah, yeah. So this was the setup where I was like in decision making, you know. My entry was when I'm here at 213 for the reasons I am used to. I made it that the entry averaged up to 206.80 and I woke up like here. So my TP missed by 10 cents, which was pretty shitty. But it kept grinding on this 4-hour uptrend. You know, it had that downtrend from the 1 hour. I'm learning to make it that it makes sense. And it kept breaking those interiors, you know, and then kept grinding and grinding and then got this huge pump. It had the potential to break out and break the last trend and then nuke higher. It didn't. But that's also when I had to make a decision eventually. And because it kept grinding on that 4-hour up, it's like, okay, we're running into US data and US Open is like in 1 hour. And this looks like pretty solid support that's like consolidating and pinching under resistance. And 4 hour has priority above 1 hour. So yeah, I actually then pulled the trigger here at this wick low and then exited here, which was close enough to my so tiny loss. Now after diving past, I'm obviously a bit pissed, but I exited for reasons because I want to learn that framework. For now, it confuses me more than it helps me actually, to be fair. If I were to fiddle it into the things I already know. But it's a matter of time and exercise. I can only learn so much every day, and that's why I'm sharing in chat, sharing success, sharing mistakes. Hope others learn from my mistakes. Hope others get profits from the things I share that make profits. So, yeah.
We have an interesting comment. Maybe you can read it to make more sense of it, because I've not used the visibility tab. But it says, I initially started color coding my RSI trends by time frame. I found you can also limit the visibility tab to only show on a specific time frame. Now I'm setting up templates for my trend rays, like 4-hour RSI with color plus time frame. Do you use the video? I'm interested to know how that works. Do you use the visibility tab for this?
That's actually sounds pretty cool. No, I have no fucking clue what the visibility tab is. Usually I'm finding one solution and then I'm grinding into it and then don't look for anything else. So happy to share, like if you could share the clips Nova, where that visibility tab is, or if anybody else knows.
Yeah, I'd like to learn about that. That sounds interesting. Put it up now.
I've used it, guys. I can just briefly describe. So if you're putting line work on a chart on any given time frame, you can select which time frames the line work shows up on, so that when you
This
say
one?
put a bunch of 5-minute levels, if you put a bunch of 5-minute levels, for example, then you go up to like a 1 week chart, everything looks totally screwed up, right? So it just erases those lines from the other time frames, so you can experiment with that. It's pretty handy for keeping your chart clean across any different time frames.
That's pretty cool. I always was wondering what this tab is actually about, and then I just ignored it. So if I was to like
So when you
this hours,
when you put your trend line on and select 1 hour, when you go to a 15-minute, it will disappear, and your 15-minute trend lines will appear.
okay, and it is as precise as like the exact time frame. When I do 15-15 range and I'm on the 15, that's like my 15-minute chart, right? But if it was like to 30-minute, 15-13 range, it would show up on both, I guess. And anything in between, but not lower and not higher. Yeah, cool. That's pretty crazy. Which reaffirms my statement of you can only learn so much every day. Much appreciated for sharing this. Thanks. That's pretty handy. Because yeah, obviously those lines get super messy if I go on my, and now you understand probably why I have various charts. But if I go on my 4-hour chart on the 30-minute, then nothing makes sense. It's just a bunch of gibberish that does useless things.
Oh, that is really useful, isn't it? I'm just playing around with that now. That is so useful.
Thanks a lot.
Yeah, Eclipse Nova. That's great stuff. Thank you so much.
Yeah, I would.
This has been a good session. This has been a good session.
Yeah, I hope so. Thanks for just pushing to just make it now. It was requested a lot when we will have a RSI session. It's a lot of shit, and you will find yourself in taking trades and then find out later why it was wrong. But I feel like that's for every framework. So this is not different. I hope it will help you to get more confluence within the things you already know. And
Tell you what, Blue, the last question about RSI, you changed the range period? You know, I think it's the length, isn't it? You change it. I think the standard is like 14. Do you ever change that depending on which time frame you're on, or do you have a custom one?
I never change it, and what I have is 14. Is that default? I guess it's default. I tried 12 once, that I know, but I haven't had the same results, so I gone back to 14. And I would not recommend using the plotting because it will show you some stuff that's sometimes not there or not relevant, and it will miss a lot of trades. So right from the start, if you're using it and exercise it, even if it's like how you say it, helper wheels on your tricycle while you're trying, I recommend to just not use it right from the start and then get right into the woods of trying yourself. I'm not saying you need this Pollock artwork here where you don't understand shit. Just start on a plain chart. Maybe paper trade it a bit, same as anything, and see how things would have went when you were matching timeframes. And I guess I didn't explicitly said it, so I write it in chat now. But if you were to trade extremes and then try to find timeframes you are matching, where you want like okay, everything hits the highs, and then I probably find also trends where it's hitting resistance just now. Yeah, that's when you get the highest quality trades. It depends on what kind of trader you are. If you're like looking for a lot of trades, then you also have to go with more lines, more time frames. But if you're like a swing trader, then you would be looking for like, okay, the matching of the weekly, the daily, and the 4-hour, and maybe the monthly. Then for you, which is super slow, but have super valid trades, super strong long trades that you can just let run. But if you were like a more day trader, you are probably more into the daily 4-hour and 1-hour. And if it's even more trades you're looking for, then I would say even the daily 4-hour, 1-hour, 50-minute. And if it gets more high frequent, then you're perfectly at the 4-hour, 1-hour, 15-minute, and then 5-minute. Because one reason I have all those time frames is not for the engulfments only, because sometimes you find, yeah, 3v3s on like the 12-minute that's not on the 15-minute or 10-minute and so on. So they are all relevant here. But you also have some more nuances. If you're not sure on the 15-minute and the 1-hour and 4-hour, you probably get an answer on the 5-minute for Confluence to pull the trigger. But if none of those match, then that's also a signal that there is no trade usually, because you don't want to take a trade just because the 4-hour and the 5-minute is matching. If you are looking for exercising on high confluential matchups of different time frames saying the same. Makes sense to you. So it's like quintuples or triplets or quadruplets of time frames for RSI to find a way, okay, where do I start now? I have all this information and all this blah blah from the last 1.5 hours, but what is my actionable item? Then I tell you, turn off those bullish and bearish plots because they will confuse you, and then get into kind of trader you are, how frequent you want to trade, and then take your triplet or quadruplet of time frames that I just mentioned. I will write it in chat afterwards to then exercise and see how it goes. And if you can understand how this not being a bearish divergence was still a pretty good short for different reasons when you exercise it. Yeah.
Great stuff. Yeah, so does anyone have any questions? I think we've been on for a couple of hours now, so we can wrap it up soon. I don't want to take any more of your time, but does anyone have any questions before we call it a day? I guess, yeah, go for it.
No. All good. Like a great session. Learned a lot.
Yeah, thanks for coming.
Yeah,
It was fun
yeah,
again.
me too.
If we can manage somebody, it looked like Eclipse Nova is like the smart person here of using all of TradingView's abilities, because we have a big question by Big Tree Small X in the question forum. About like a TradingView masterclass. And as you can obviously see already, I'm probably not the right person to talk about quality of life in TradingView. So if one of you is super deep into these things, I know Zach, you explained once the templates for all those lines, and I implemented them for myself already, which is pretty neat for workflow. But if one of you feels super confident about a masterclass, sounds like, okay, you need to know everything, but I guess it's more about like, okay, this is TradingView, here are the cool things, you can configure it like this, that, and whatever, and have those shortcuts and hotkeys. If one of you feels confident to do something like that, that would be probably very, very valuable for everyone to do a session about it. So I would appreciate if you reach out if you feel confident about it to work something out and have a session like that in the future.
Yeah, it's funny, isn't it? Because you think you know everything, and then someone posts about the visibility tab, and you're like, oh, I didn't know that.
Yeah.
Yeah, super. So hopefully next week we can get someone to give us a masterclass on how to use TradingView, and I'm going to keep playing around with the divergences. And Blue, thank you so much for your time. Thanks everyone for joining us. We really appreciate it. A reminder to everyone to go and subscribe to Sin's YouTube channel and watch the 5-minute scalping video he did, which I thought was really good. If you haven't followed his channel yet, it's he gives like daily updates on everything, and it's just great info. So I definitely recommend that. And yeah, as always, thanks for joining us, guys. And yeah, we'll see everyone next week.
Yeah, thank you too. It was a lot of fun. Thanks for hosting again. And if you're exercising, guys, and you have questions about RSI, don't hesitate to hit me up and ask me.
I think we need like a little theme song, don't we? That I can play at the end and the beginning of the sessions to kind of smooth out the intro and the exit.
Actually, yeah, that would be pretty neat. Yeah, pretty cool.
I'm sure someone can make us one on AI. It's it can't be difficult.
Yeah, CP Bacon, if you're listening, would you do something for us?
Nice. All right. Thanks,
Alright.
guys. Thanks, everyone.
Guys.
Thanks, Blue.
Have a good one. Catch you later.
Okay, guys. See you soon.
Bye.
Out.
All right, bye-bye.
Bye.
Bye, Zach.